Hey guys, RC Peck here with Fearless Wealth, and I want to talk about gold. And gold's an interesting sub asset. It's actually a sub asset, right? Because the main asset class is commodities. And then when you step down from there, then you'd have metals, and then you'd have precious metals, and then you'd have one of the precious metals, which is gold. But that's really just me kind of nerding out on how many steps down gold is. It's important because it has a pretty good history of being a place that people go when they're concerned, but not always, right? And this is the thing that people get wrong with gold all the time. There are times you want to be in gold and there's times you don't want to be. So gold's not one of these things where you just have 5% of your money in it. It's not an insurance policy. I really hate that framing, that idea of insurance policy. Um, there's periods of time where you want to own gold, and there's periods of time where you don't. Same thing with stocks, and same thing with bonds. So when the Fed started printing money again in September of 2019, they actually started on September 11th when they started September 11th, 2019, they started expanding their balance sheet. And one of the comments I made either on one of these videos or to the research group was, it's going to be interesting to see if gold goes higher with money printing or balance sheet expansion, right? So, because when the Fed expanded their balance sheet in 9, 10, 11, 12, and so on, 13, 14, 15, 16, gold peaked out in 2011. And so all that extra expansion in the balance sheet didn't really help. But this time it's different, right? The central bank started, the US Fed started expanding, and gold continued to move higher. And so I want to talk about gold. I want to talk about what it's doing. But even outside of gold, and you can do this with any symbol, any sector, any segment slice, um, about what I'm about to talk about, and you'll see what I mean when I get to it. So I'm going to start with gold itself. This is just a price chart of gold itself. It's not a tracking ETF. It's literally the commodity gold. So the first big sign, I'm going to talk about a lot of the bullish signs that have been happening. The first big sign for gold was when it really broke above this 1385. And any price I talk about on here, there's always going to be a plus or minus of a couple percent of either side. But basically, gold was stuck below about 1385, couldn't get above it. And finally, in July of 2019, it broke above. And that was this period right here. It finally broke above. So that was July of 2019. But GDX, which is the basically the S&P 500 of precious metal mining, if you look here, it didn't break above in July of 2019, right? And I'll show you where July of 2019 is in a second. But it didn't break above. It was staying below its own resistance, and its resistance was about $31. Now, here is where gold broke above, gold itself. And this is not gold, this is GDX, which is a precious metal miner ETF. Now, it did peak higher, but it bounced off that $31, came back down. And then we had this COVID collapse here, COVID crash. Who knows what it's going to be called, the market of 2020. But GDX took a big hit right here, right? It hit that $31. And I know we're zoomed out, but you can see this visually, this huge hit. And I was in it, and my research service had a GDX position, and we got kicked out of it. That was a very violent move. It fell 39%, and even more if you look at it intraday. So we immediately got kicked out of that. And once it regained and started moving high again, we got back into it. And that's more a sign of how your mind works, how your brain works, how your wiring works, how your emotions work, how your psychology works, to be like, no, I'm right about this. Yes, we got kicked out. Yes, I have to go through some sort of process of just dealing with that. But going, yep, got kicked out right here, got to get back in. And so we did get back in with a different ticker symbol. But this clean out here, I was like, that is a huge clean out. And I think that's even setting up for GDX to break above 31. And then finally did. It broke above, had this beautiful correction here, and did not correct down to $31. Now, this is really important. When GDX broke out, it broke out It broke out of that $31, which it was under from what 7 or 8 years, and it went from 31 and it immediately went to $37 and corrected down. I thought it might go down back to 31 and test that, but it was such a strong breakout. It only fell down to about $33. And that's significant because when you start seeing a price act more and more bullish, even when it quote unquote shouldn't, that's really telling you that this symbol is in strong hands. But the small cap, or like this industry likes to call them, the juniors, did not break out. Here's where gold broke out here, and the metals broke out here. The large cap metals broke out here. But this is the small cap precious metal. They did not break out until just barely recently. The reason why this is important is because think of GDXJ as like the small cap. This is kind of where the crazies live. This is where the people who have more of a price volatility tolerance. They can handle quote unquote more risk. I don't like using risk. I don't use the word risk when I train people because risk is a very weird word that the brain doesn't understand. Price volatility, price movement, the brain can get. And so you had gold break out of its 1385 in July of 2019. Finally, large cap broke out in May, and finally, small cap broke out just recently. And that's a big deal because now you have small cap and large cap having broken out. And GDXJ, the price chart or the ETF itself hasn't been around that long, but its high, its lifetime high is 140. And the breakout was at $49. So from $49 to its lifetime high is 190%. I believe it's going to go back up and test that 190%. I mean, as it is, gold itself is only 4% below its lifetime high when priced in dollars. If you price gold in almost any other currency on the planet except the yuan, which is pegged, the Chinese yuan, which is pegged to the US dollar, it's already at lifetime highs and moving higher. It's the big holdout has been the dollar. And now we see that that old lifetime high in gold price in US dollars, right about $1,900. We're about $80 away. And I'm doing this recording on Wednesday, July 8th. So GDXJ breaking out is important. The other interesting thing is when you take GDXJ, you divide it by small caps, just small caps across the US. Just, I'm taking IJR, which is the iShares core S&P small cap ETF. You can see that this battle between precious metal mining small cap and just normal small caps in the market has another barrier that I believe is going to be broken again. This ceiling right now. This is a ratio, so the numbers on the y-axis don't necessarily matter, but what matters is that this ratio can't get above this price, and I believe it's going for that hit test again, and I believe it's going to break through it. The reason I point this out is because small caps, just normal equity small caps, they have not done well for quite some time. And I believe people who want that extra satisfaction and what a small cap can do, one of the biggest kind of moves or explosive moves one can get in any sort of sub sectors is really small cap precious metals. And so we have this small cap precious metal setting up here with this relative price chart. The other relative price chart that I thought was interesting is taking small cap precious metal and just dividing it by GLD. Actually, I could do it by gold too, but I'll just do by GLD right now. And it's already broken above a pretty significant resistance here. That's about a 4-year price resistance that this ratio, again, this is GDXJ priced in gold. It also just broke above that. So now we have small cap outperforming the metal, large cap precious metal outperforming the metal. And so these are all more validations that the people who own these symbols, the GLD or the gold or the large cap or the small cap, it's in the hands of the buyers. It's in the hands of people who are watching it and wanting it to go higher. They're not getting scared out anymore. And then we have a next major kind of resistance coming up here. Again, this is GDXJ priced in gold. I also believe it's going to break through that. Now, it's not going to go just shoot up rocket ship like it's Tesla, though it could if Robinhood traders really get a hold of this. People can get pretty fanatical with Robinhood, or Davy Dave's trading gets a hold of precious metals. And this thing could get very explosive very quickly, as we've seen in some other symbols. So some pretty interesting things are going on with precious metals. If I pop over to silver for a second, I'll just look at SLV here. Silver is really wanting to break out. And there's a bunch of numbers here it wants to break above. One of the biggest ones it has to get above, and I believe once it gets above that, it's going to make a beeline for $50, but it's got to break above and stay above $19. And the two blue horizontal lines that you see on the screen it's a range. I do ranges because a breakout is never a single dollar amount, but kind of a range. But silver's got to get above $19. And then what it's going to want to do is make up for lost time, right? It's going to make up for underperforming gold for so long. It's going to want to make that up. And if you look on my screen and you go back to 2010, before silver peaked out at $50, it was being held back by that same $19. And then once it broke above, I mean, look at this. Once it broke above, it shot almost straight up, right? So that time frame to go from $19 to $49 was, let's see, October. So we got 3 months, 6 months, about 7 months. It did that move from 19 up to 49, and that is 162%. I don't think it's going to stop at $49. Now, I also don't believe this will go straight to 500 or 5,000 or some ridiculous number other people are saying. But look, this could be a perfect storm for precious metals finally. And I said, gosh, did I say it at the end of last year or the beginning of this year? One of you could check me. I said, if precious metals don't break out and make a significant move in 2020, when will they ever do it? Right? There's more uncertainty, money printing's happening, debt uncertainty's happening around the world. There's basically no bond market. I mean, of course, there is a gigantic bond market of 200 or $300 trillion. But what I mean is, no one can complain anymore that gold doesn't have a yield. Gold doesn't yield anything. It's like, what a bunch of garbage. Like, just buy things that are going up. But when a bond has no yield anymore, then those naysayers of gold not having a yield doesn't really hold water anymore. And so we've got silver coming up to that $19. And again, I think it wants to break through that. And so what we're having is one by one, these huge barriers. Gold broke through a barrier. GDX broke through a barrier. GDXJ just broke through a barrier. GDXJ relative to small cap stocks has a barrier that it's moving up to and wanting to break through. GDXJ priced in gold has another barrier in front of it that it wants to break through. And I believe the people who are holding this type of gold, they're holding it, right? And a lot of these men and women have been holding it for a while, and they want their day. They want to get that back. And it should not surprise anyone if gold gets pretty out of control the second half of 2020, especially going into the election. And one of the things I've even noticed recently is when the stock market is down, precious metal mining stocks has been up. That's a significant thing because oftentimes what you want to be checking for or watching for is the precious metal mining stocks. Are they acting more stock like or more gold like? And the more the stocks act like gold, right, the more precious metal mining stocks act like gold, the more power there is in this gold move. And so we're starting to actually see that now. In fact, in the last couple of weeks, when there have been noticeable down days in the stock market, the precious metal mining market or precious metal equities market has been up. And that's, of course, a very bullish sign. So things are absolutely moving in precious metals. They will not move in a straight line. But I want you to remember when, let's just call them symbols, like stocks, bonds, commodities, corn, goats, milk, like anything you can track, something making new 50-week highs, 100-week highs, 200-week highs, 300-week highs. I know no one talks in those, and I'm not saying I do, but when a symbol is making new highs and breaking out of very big bases, and you can see silver is what I believe is soon to break out of a very big base. When you have a base that size, the kind of the phrasing in the world of technical analysis, the bigger the base, the larger the space, meaning the larger the space it's going to move to the upside. And that's what we're seeing. Now again, don't get married to gold. Gold is not something I believe someone should own for the next 10, 20, 30, 40, 50, 60, 100 years because you were taught by someone it's an insurance policy. It is not. What is an insurance policy is a strategy that doesn't care what it owns. And I really want you guys to get this, because what matters most is how you behave. That's what matters most. Everything comes down to how you behave, right? We've all had the same stock market over the last decade. And some people popped to cash 10 years ago. Some people popped into cash 3 years ago. Some didn't. Some just bought the S&P 500 and they've done really well. And so it's behavior that determines your outcome. But that's actually not even that's not even all true, because what drives behavior? And the answer is emotions drive behavior. How your brain is wired. And that is even, I even want to take one more step from that, because that's not really it. Because even the word behavior or psychology or mindset or emotion or feeling, what this absolutely comes down to is how you respond, how you act, how you react to words. This is so key. How your brain responds to words, what words it allows to come into your life, what words it filters out. And I know this sounds weird for me to say. The key is understanding how to filter out and act or react to words, because words create emotions, right? A lot of you have put comments in uh, on the YouTube channel. I love it. And I read every comment. And I want to thank you, because your comments are very generous, meaning you're not coming in dumping your rage, dumping your hatred. I have zero tolerance for that. Go do it somewhere else. What I like about your comments is like, hey, well, what do you think about this? Or, hey, I don't agree with you here. What about this? So I like that. That's a, hey, this is what I'm thinking. Or, hey, have you thought about this? And a lot of the comments later have been around going all to cash. I went to cash, or I'm going to go to all cash, or I just went to all cash because the market's about to fall, or I'm going to go to all cash because the market's about to have a big correction. And whenever I hear that, what that tells me is that person has reacted to words. They've been hijacked by words, because how do they know the market's going to crash? How do they know the market is not going to go up another 7 years? One of the things I just heard, and this is really important. So look at the S&P 500. So I want you to see this. So right here, right at the beginning of 2013, I'll just put my two blue lines right there. Right there at the beginning of 2013. Actually, I'm going to zoom out and just show you this. We broke out to new lifetime highs. And actually, let me do it slightly different, because this is important, because this is how people get hijacked. And this is so important. This is more important than someone giving you a ticker symbol each week or each day or each whatever. And I harp on the pick of the week, pick of the month newsletter. So right here is where the S&P index broke out to new lifetime highs. Right there, guys. Right. So that's March 2013. Right. But let's just make it really easy and say this beginning of 2013. The stock market, because I'm just going to round here, the stock market broke out to new lifetime highs. Guys, that was the beginning of the bull market. That was the beginning of the bull market. So that's 1, 2, 3, 4, 5, 6, 7. We're 7.5 years into this new bull market. We're not 10 years into this. Bull markets start when they break out to new lifetime highs. That's why in 1982, we started another new bull market that went from 1982 to 2000, right? If you go from the bottom, then we have to go from the bottom in 1974. Let me zoom out just to show you what I'm talking about. The S&P 500 index bottomed in 1974 right here. But I bet you're willing, and I bet you're like, well, no one ever says that the last bull market ran from 75 to 2000, right? That's 25 years. No, people say it ran from 82 when it broke out right here to new lifetime highs in 19. Well, that's actually 1980. If you have to go to 1982 where it broke out and stayed broken out. So it actually popped out in 80, came back down in, but finally in 82, it finally broke out to new highs and stayed above it. So the last bull market was 18 years. And I've never heard anyone do anything else other than say it started in 1982, not actually mid 1974. So this bull market is 7.5 years old, and the last bull market went 18 years. Guys, we could go another decade. I'm not trying to sell you a newsletter. I'm not trying to scare you into an annuity. I'm simply pointing out to you that when you get hijacked by words and don't know it, you end up going into a position of something that can hurt you. And if you want to say the bull market started in March of 2009, then you got to say the last bull market started in August of 1974, and the last bull market went 25 years. That means this bull market can still go another decade. So words hijack us. And if you're not trained to know how to filter them out and know if they matter, what happens is you end up in, cash for years. And guys, it's not your fault. Our brains were not designed to grow money. Our brains were basically to get us to the age of 45, and then we were supposed to die. And life expectancy in 1900 was right around 45. And now I'm really rounding here, guys. We're living to 90. And so this idea of growing money is a very, very new concept to the brain. So, guys, I really appreciate you being here. I love your comments. I read them. I think about them to then what I should talk about in these videos too. So please continue to leave your comments and subscribe to this channel and spread the word. And if you're finding yourself that you're liking this type of thinking where I'm kind of forcing you and showing you, I want you to think in pictures. I want you to filter in pictures. I want you to buy black squiggly lines and to filter out the noise, then you're going to love my new do-it-yourself 2K for 10K course. And that's just what it is. You invest 2K, that's the cost of it. And I make sure I create 10K of value for you, or I give you your money back. And all of that information, the guarantee, the promise is all on the link. fearlesswealth.com/2K for 10K. And there's a link too. So guys, I appreciate you being in my world. Keep the questions coming. And man, the second half of this year, even before that, I mean, gold's been doing well for quite some time. So this isn't even a new thing, but precious metals are acting very differently in this new regime of zero interest rate policy, not just in the United States, but across the world. Trillions of dollars of money expansion, whatever term you want to call it, but central banks are expanding their balance sheet by trillions of dollars. And the rates around the world are getting pegged to zero or even negative. And I think finally people are waking up and going, you know what? Something's off here. And they're starting to take notice with gold. And I got to tell you guys, gold is not a big sector. Gold is not a big sector. So when money starts moving into that, we really could get this Robinhood like. If you don't know what I'm talking about with Robinhood has been, the traders in Robinhood have just been going crazy and bidding up sectors and stocks and segments in just a super crazy way. So It's all mindset, guys. It really is. The longer I'm in this, I've been training people for 22 years. The more people go, it's all about how I behave. It's not more information. It's not more ticker symbols. It's about how I behave. Thanks so much for being here in my world. I appreciate you guys so much. Leave some comments and I will connect with you soon. All right, guys, take care. Bye.